Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Our guest today is David Morgan, the publisher of the Morgan Report and a legend in the silver industry. Welcome back, sir. How are you?
Doing well, Ivan. Thanks for having me back and good to see you.
Yeah, it's great to see you. It's been a long time since you've been on Wall Street Silver, and I'm super glad that you came down. I wanted to start off by talking to you about the gold markets, silver markets, everything that's been happening lately. This past year, silver passed $30, gold is going up. What is happening in the markets, David?
Well, gold's leading the way, as many of us have reported, and we're in the next and probably the last phase of a major secular market in the precious metals. So, hooray, hooray! Gold has broken out of the 2000 level and is probably never going to see a number below that in US dollars, and we're going to get higher and higher prices. And of course, it will stall out and go sideways, and there'll be big corrections. The function of a bull market really is to shake off as many bulls as it can, or as many people that are bullish on the way up.
Right.
But we don't know the exact price of the ultimate high, but it's far above where it is now.
Absolutely. And I wanted to ask you, David, how do you manage risk when investing in precious metals like silver and gold?
Well, there's two things. I look at the markets differently. You have the gold and silver market physical form, and then you've got any derivatives. And of course, the Morgan Report, we look at primarily equities in the resource sector, not just silver and gold, but most of our investments currently are silver, gold, and uranium. And so on the stock side, I'll address that first. There, what I do is have a set stop loss, taking no more than a 15% loss in any stock.
Hmm.
On the juniors, since we recommend um, our best guesses at what could be home runs, but this is money you can afford to lose. So we're talking about very, very small investments and only adding if and only if there's material change in the company. And if there is, I put out an alert to everybody, explain why it's still undervalued, even though it's gone up 300%. In some cases, it's overvalued 300%. So I put out an alert and say, hey, let's take our 300% profit. But on the big money and the big stocks that I've taught from day one in the Morgan Report, we do have a stop. And if it starts moving in a direction, which often they have, then we put on a trailing stop. So that's when we mitigate risk on that side. On the gold and silver side, really, it's it can be more difficult. It depends
Right.
on what you want. So that's not a one size fits all, like a 50% stop is on the stocks. Usually, if you aren't in for the long term and you dollar cost average, that's all you have to do. So if you have a set amount that you need, which would be 10% of your portfolio, and you're going to get there on a monthly basis, then you just set a buy program that you accumulate over time, and you really don't worry about the price, because as long as you're in a bull market, your average cost will be lower than the final price you sell. So that's one approach. The other approach is to look at what you need, and just you can buy it in tranches
Right.
below a certain level. So what I do personally is I say I won't buy it above this price, and right now that price is 25. Okay,
Hmm.
and we're in the 30s again. I did set it lower at times depending on the market conditions, but as it moves up, I could stair step up. I always want to try to lower my average price, but that's not always possible. And I have been pretty lucky. I mean, during the illness, when we got that real washout in March, I got it the day before the low. And the day before the low, I think physical silver cost me about 14.
Right.
The next day, I think it went to 12 on the paper price. And I called my dealer and I said, I muffed it. He kind of laughed. So if I buy it today, which of course I can't renege on a deal's a deal, how much lower would I get it for? It was 50 cents.
Right.
So even though the paper price was $2 in the physical market, it really hadn't dropped that much.
Mm.
And so, now, to be fair, in the futures markets, if I would have taken a contract or two or three, I could have paid them off and got it for buck and a half lower. But in the real market, I'll call for retail investors, I didn't miss the exact bottom by much.
That's awesome. So what do you think, David, are basically common misconceptions people have about investing in silver and gold, and how would you address them?
Well, there's a lot of people that are new investors that get, what you and I and many others have taught over the years, and that is how the system is set up. And, it's really a fraud. You can't get something for nothing, and you can't print wealth for very long.
Right.
You can print wealth for a while, and as long as people don't realize what's going on, those pieces of paper have value, and things look better for a while. Of course, the US has had the luxury of doing that on a global basis, so there's a lot of suckers out there to take this more or less worthless paper and
Hmm.
pretend it has value. But I think the number one is that as soon as I buy, the market should go up. That's number one.
Right.
Number two is over investing in the metal or buying the wrong kind. Calling up a dealer, never having done it before. And I outline almost all these, Ivan, in a public document called 10 Rules of Silver Investing. You can just type in 10 Rules of Silver Investing by David Morgan. It'll pop up. It's all over the web. And I'll really outline these ideas that will keep you out of trouble.
Right.
One of the recommendations, suggestions is start small. So if you've never bought it before, buy a small amount, see how you're treated, see how soon you get it, see how it's packaged.
Yeah, like don't buy $1,000, buy like $50 or $100
Yeah.
worth of coins or something.
And so that's, it's pretty common sense, but people get excited. Oh my goodness, the system is a fraud. I'm going to protect myself. How much have I got in my savings? Oh, I got $7,000. I'm going to buy $7,000 in gold today. That's
Right,
just the wrong.
right.
Don't let your emotions run your investment decisions. So I think that's number one. Number two is probably expectations, expecting that it's going to be the end all be all. It is a hedge, and it's a hedge for a reason,
Right.
but it really doesn't overshoot its value very often. But when it does, it usually overshoots to a large extent, especially silver.
Yeah.
And that's sort of what we're betting on, but not necessarily. In other words, preserving your wealth is paramount to making a big capital gain, because when things go the wrong way and the stock market really starts to reflect the physical economy that's contracting, and so the stock market's going down, bonds are really not worth the paper they're printed on, but no one will admit that in the mainstream financial media. But when things start to go awry against a general investor, that's when the metals really shine. Excuse the pun, but that's really why you have them. So you have to have a balance. That's another mistake. It's like, oh, I'll go all metals or too much,
Right.
wrong kind at the wrong time. If you just suck it up and use some, your God-given brain power, and most people have it, they just get emotional. I understand it. The markets are emotional,
Yeah.
and they're taught that way. I mean, you get these talking heads on the mainstream financial channels, as you know, Ivan, and boy, they get you excited. You got to buy, you got to buy one of the top seven movers. If you don't
Oh
buy one,
yeah. All it
you're
takes
an
all
idiot.
it takes is like one or two silver videos for me, and I'm already pumped up to buy some silver. But I wanted to ask you too, David, what role does, the physical versus paper ownership of silver and gold play in your investment strategy?
Well, I've always taught to have the physical metal first, and
Right.
that's the money of last resort. And that the reason being, as we've all heard 100 times, it's the only monetary asset that isn't someone else's liability. It stands free and clear of everything else. And if everything burnt to the ground, as a metaphor, it's not going to. It's not the end of the world, but there are going to be big changes. There
Right.
already have been big changes, and there are even bigger changes coming in the financial system going forward. But it's the money of last resort that's universal, it's ubiquitous, it's worldwide, it's pervasive, it's everywhere, and everyone, more or less, understands it has value. And then you can argue on any given day in any given market, how much value does it have? But the point being is, over
Right.
the longer term, it always preserves wealth. And at times, it actually not only preserves your wealth, but can help you become more wealthy, or let's say mitigate problems that others have that have not taken the time to understand the precious metals markets.
Yeah, absolutely. Now, what do you think about the BRICS nations? Do you think they'll be successful at rivaling the US dollar? Will it be like in the next 10, 20 years? Can they even tie it to the a gold standard like what they want to do? What do you think?
I think it'll help mitigate them, and the more people that join it gives you much larger foreign exchange market.
Right,
So in
right,
other words, there are only two countries or three or four in the BRICS. You know, if you could only exchange rubles for yuan to South African rand, that's a pretty limited market. But when you have
right,
20 different nations and you can go for the real from Brazil and all these different currencies, you got a pretty good foreign exchange market, which means you have a good market. As far as it replacing the dollar, I don't see it. I do think that the advanced capital markets are still based on the US dollar because of the extreme amount of debt in the world. And
right,
that debt market's primarily sovereign debt by the US government. So almost all the biggest debts in the world are based on US Treasury bonds. And because of that fact, it'd be really hard. There is no bond market for the BRICS. And unless one is developed, and Jim Rickards did a great outline of why the BRICS don't really need to have a bond market. All they have to do is put in a floor on the gold price,
right.
and they could mitigate the dollar strength because at some point the U.S. might have to buy gold to strengthen the dollar, and that, of course, will it's a paradox. It's actually be weakening the dollar. I won't go through all of it, but you can catch that interview. It's pretty profound the way he analyzed it, and I think he's right.
Yeah, yeah, no, absolutely. Well, David, it's such a huge pleasure having you come down to Wall Street Silver and talk about the silver and gold markets, silver breaking out of $30 in that $30 range. As the markets develop, we'd love to have you back onto the Wall Street Silver channel.
If I could come back right now and just share one thing,
Oh
if I
yeah,
could
yeah,
share
share
my
with us before
screen,
you go.
I've got one here that I like to share. So, Ivan, can you see my screen?
Yeah, yeah, I could see it.
All right, this is from Matt Watson. He does great work. I was introduced to him by the Silver Institute. But what this shows is a silver demand low case. And the red line here goes basically straight across, tips to the right slowly, meaning that the mining of silver and recycling of silver is actually in a downtrend, and that's true.
Right.
And what you can see is these lines that go above that red line, that's a deficit. And the only way that the supply and demand can equal, and they have to equal every year, is to eat at the above ground stockpile of silver. So you can
Right.
see from last year onward, as far as we can tell, based on the best data we have now, that we're going to be in a deficit from last year through 2050. If
Wow.
you go out to about the middle here, like let's say 2034 or 5, looking at this 1 billion ounces and going up to the top here, about 1.45 billion ounces, that means it's like 450 million ounces in 1 year that you're going to have to eat from above ground stockpiles.
And where are you
But
going to
there's
take it
only
from?
something like 2 billion ounces above ground stockpiles now. And the one thing I disagree with Matt on, but this is just my thought, what I want to share it with the Wall Street Silver community,
Mm-hmm.
is the silver or the gray line here is investment demand. And he shows that as a constant all the way out. I
Well, yeah,
totally,
it could go up, it could go down, it
it
could go
could go either,
sideways.
but I
Yeah.
would argue that as this monetary debacle continues, those lines will get bigger and bigger and bigger,
Right,
which
because more
means,
because more people are going to move out of the US dollar that's worthless and
yeah,
they'll move into assets
yeah,
or
they're going to get out of the
investment. Yeah.
bond market, they're going to get out of the stock market, they're going to get out of the real estate market,
Right.
and go.
And it doesn't show in this chart too, like the advancements of silver. Maybe next 5, 10 years, you could have some in crazy technological advancement that just needs a ridiculous amount of silver.
And then on the other side of the coin, which I need to voice, you could have some technological advancement that yields better returns on silver mining, or
Oh
there's a big
yeah.
discovery or something like that. So it does
Right.
go both ways.
Right, right, that's right.
But this is the low case. I mean, if you have the high case, it's up higher.
Right.
But I just wanted to point that out. Thank you, Matt Watson, for your great work. And does this mean it's locked in? No, it doesn't. But it's something to think about, especially going forward, because we've just entered the new bull market.
Yeah,
So I think we're
absolutely.
going to see a few years, if not several, where we have more and more favorable conditions for precious metals investors.
Yeah, absolutely. It's thank you for sharing this chart with us too, David. And I wanted to thank you again for coming down to Wall Street Silver. And as the market develops, we'd love to have you back on.
My pleasure. Thank you.
Awesome. Talk to you soon.